Hi guys, Dan and Kai here again from Crescent Mortgages. We've been asked this question a lot, haven't we? Should you buy a property, should you move house or buy your first house in the current market with interest rates as high as they are? So at the time of filming, interest rates have jumped up quite significantly, which is obviously going to have a bearing on your big bearing on your monthly outgoings and specifically your mortgage payment. So we're going to give you some pros, cons, try and help you make the decision. So let's jump into it. Deciding if you're going to move house now, it's not ideal, is it? With interest rates kind of jumping up to where they are. There's kind of two ways that you need to look at this. You've got kind of the economic decision, what do you think is going to happen to property prices? What do you think is going to happen to interest rates? Can you afford the mortgage? Are you comfortable paying the interest rate the lenders are offering at the moment? And then you've got the kind of the real world decision, which is, do you need to move house? Do you need to upsize? Are you in a position where actually that's your priority and your preference, and you're willing to take the hit on the higher interest rate to make that, that dream come true, or that move that you need to come true? So they're the two kind of ways you need to approach it, and we're going to try and kind of give you a balance of the two, I guess, aren't we?
Yeah. I'll just start with a disclaimer, funnily enough. Just to be clear. So whilst we're trying to give you information and arm you to try to help make a decision, ultimately it's individual. It's always individual. And if you want proper advice specific to you, you're going to need to reach out, get in touch, so we can give you advice specific to you. This is a bit more generic scenarios maybe, and some of them might fit you, but I want to make that clear just in case you take this as gospel.
Yeah, that's a good point. That's a good point. Yeah, contact us for specific advice. Assuming that you do need to move house, or you want to move house, you found the property that you love and your plans were to move house, and assuming that you've decided you're going to try and stick to that if it works. I guess mortgages are typically between 25 and 40 years these days, aren't they? They can be shorter, but that's kind of typically at the moment where they are, with house prices where they are. So interest rates are going to fluctuate over the duration of your mortgage term, over the decades. Some periods they're going to be higher, some periods they're going to be lower. That's just the market. That's how it works. And the other thing to mention is that although rates feel quite high at the moment, they're not as high as they were 20, 30, 40 years ago. And we have been spoiled with ridiculously low rates for the last 5, 10 years or so. So there's a generation of people coming through who think that, getting a 1.5% rate is normal, but that is actually exceptionally low. So that's the first thing to mention. In terms of kind of moving, so I guess a couple of things they can do to keep their payments down.
Yeah, I suppose the first one is you can extend your mortgage term. So lenders, as Dan touched on, 35, 40 years, depending on your age and your plans going forward. Some lenders can do that. The ramifications long term are that there will be more long-term interest. Yeah, thank you.
And more interest.
You'd pay more interest, more importantly. But you're not fixed that term. You can reduce that as time goes on if you want to or need to. And it would also bring your payments down. That's the short-term benefit. So if rates are particularly high, then that gives you a bit of control to bring your monthly payments down. Yeah,
just let's say for the first few years, let's say interest rates are high for the next 5 years, you could start with potentially a 40-year term. It's depending on how old you are. Obviously, if you're approaching an age where that's going to take you beyond retirement, then that may not be possible. But a longer mortgage term, just to keep the payments down, just to take the pressure off for the first few years. Yeah. Again, there are cons, as Kai said, more interest in the long run. But if you're really desperate to buy the house, that's one thing that you can look at. The next two maybe seem a bit obvious and they're not going to work for everyone. But if you have more funds available to put down a bigger deposit, if you were planning on holding £15,000-20,000 back in savings, then obviously putting down a bigger deposit is going to reduce your mortgage balance and it's going to reduce your monthly payment. Again, I know not everyone can do that, but that's one thing to consider. And the other one, which again isn't perfect, but if you were looking at properties, for example, within the £300,000 price range, but you potentially could find a property within the the 200 to 250 price range that is livable, then you can obviously look at cheaper properties to bring those payments down as well. Again, not for everyone and not ideal, but they're just obvious suggestions, aren't they? I guess the other thing is that if you speak to a mortgage broker or your bank and they give you an interest rate and a monthly payment that you think, do you know what, that is affordable, you can go for a fixed rate of potentially 5 years or longer. So you can lock yourself in and give yourself long-term stability of payments, which means that regardless of what happens to the economy, or if interest rates continue to go up, or you're just terrified of what's going to happen to your mortgage payments in the future, you can fix in for potentially 5 years, 7 years, 10 years, sometimes longer, to give you that peace of mind. Of course, there are risks and there are pros and cons. The risks at the moment are, with interest rates where they are, your mortgage payment is going to be significantly higher than if you'd taken out a mortgage a year ago. Payments are going to be higher, and obviously you have to factor in that, cost of living, energy bills are higher than they were a year ago. If you are moving house, you need to make sure that you've basically broken down the numbers, worked out your kind of your disposable income each month, obviously how much you're spending on food, supporting the family, get your quote from your mortgage broker to work out what your mortgage payment is going to be, and obviously do the research to find council tax, utilities, that kind of thing. And you basically just need to be comfortable that even with the higher interest rate, that you can afford the total outgoings. Don't move if you think there's a chance that actually you're not going to be able to support the mortgage and your bills, and you're potentially going to default on the mortgage. In that scenario, do not move, do not buy a house. But if you want to move, you've seen the property that you like, you've got the figures and it's affordable, then it's just a personal decision. Are you happy to pay that interest rate? And hopefully they'll level out, in the decades to come, but there's just no guarantee. I don't want it to look kind of biased. We're not, in terms of the pros, we're not telling people you should move house. I guess we're just letting you know the things that you need to consider before you make that decision. And we're aware that the housing market is potentially going to slow down because a lot of people are going to be having second thoughts about buying because the mortgage payments are going to be higher than they originally thought they might be when they first thought to move however many months ago.
Whilst we've only really mentioned one proper con, and obviously we touched on possible house prices, whatever might happen there. The main con we spoke about is always a con. It's always going to be the most important con, that if you don't think you can afford it,
it's broad.
Then don't move because it's too risky. If you're in a lucky enough scenario where you have a lot of disposable income, and whilst the higher interest rates aren't great, you can still afford it, then it's not necessarily the end of the world. Certainly if you're buying a long-term family home for the next decade plus, house prices will fluctuate in that time, interest rates will fluctuate in that time. It's not quite as important. But if you're already struggling a little bit and then you're maybe upsizing, you're going to be looking at 6% rather than 2% or whatever the rates are at the time, then that's going to have a huge impact. So whilst we've only really labelled one proper con in there,
it's a broad one, isn't it?
It's broad, and it covers a lot of different people at different areas. So I think it is finely balanced, and it's very individual, isn't it?
Yeah, exactly.
Which is why we can't really give you more cons depending on your circumstances.
And as we've said with all our videos, especially the recent ones, in the current market, you really, we will sound biased, but you really should get help from a mortgage specialist, a mortgage broker. Whether that's us, obviously, if that is us, get in touch. But whoever it is, it's going to be really difficult for you to navigate the market at the moment. It's just chaos. Even for us, with all of the tools that we have, it's really hard to navigate. So get the right help. I guess the final points just to touch on really briefly. Number one, I didn't mention obviously with the mini budget, stamp duty thresholds have increased. So one thing to consider is that depending on how much you buy for and your circumstances, there could be thousands of pounds saved on stamp duty, which you could potentially use to put in your bank account and help support your bills and the mortgage for the first however many months or years. But the second thing is, obviously, I did touch on it briefly, housing market and what house prices are going to do. Now, this video, we're not touching on that in any depth at all. And that's probably another video that we need to make. But obviously, it's something to consider that, if house prices did take a dip, then your equity would drop. But again, we're not going to start to speculate on how much we think house prices will go up or down or stay the same over the next few years. That is a different conversation, but it's something that you might want to consider if you're deciding whether you want to buy a house in the current market. All right, guys, thanks for your time. Thanks for watching, and we'll see you next time. Any questions, just get in touch or leave them in the comments. Thanks a lot.